All right, I'm back at it again, round two. It's about 3 o'clock. I just sat down. I'm going to go search through my watch list and some things not on my watch list, and I'm going to look for a trade. It's power hour, so it's time to find a trade. I'm not going to force anything, so if I don't see a setup, I can't trade. But if I see a setup, I'm going to jump in. Okay, so I'm seeing something on Verizon here. This seems crazy, but just follow me. The last few times it came down to the 180, it bounced off. Look at this. Almost hit the 180, bounced off, back up, hit the 180, bounced up hard, right? Hit the 180, bounced up hard. Now look, it's hitting the 180. So I'm seeing a pattern, a trend of this thing coming down and hitting the 180 moving average and then bouncing back up, right? Every time it comes down to the 180, it bounces back up from what I'm seeing here. Even going back further, look at this. Touch the 180, bounce back up. So it seems like this thing's got a history of hitting the 180 and bouncing back up. So now I'm thinking about playing this trade that I just played in reverse, which is an interesting idea. These are the stop loss and take profit alerts I had set for the past trade, which was a put. Now I'm thinking about flipping that around because as you can see, look at this candle. It came down to the 180 and what happened? Just about touched it and then bounced back up. Or at least so far it looks like it's bouncing back up. Look on the 1 hour. Looks like a bounce back up. Right? 15-minute, same thing. Looks like a bounce back up. Just crossed the 15 period moving average. So now I'm thinking this thing's going to bounce back up at least to the 15 day. So now my stop loss would be, or my take profit in the call would be where this line was before for the exit of the put, stop loss of the put, would now be my take profit of the call right here at the 15 day, right at the top of this candle, right? Where there might be some resistance there. Scrolling over, let's see, was there any resistance there before? There was some support right here. You can see it bounced off of there nicely for some support. Hasn't really been that high in a while. Other than that, there was some nice support right there. Support likes to turn into resistance, so that would be my same place to get out. The previous line that I had for a put stop loss would be where I would be looking to get out for the call, right back to the 15 point moving average. And then the stop loss of the call would be right here, just below the 180, where the take profit was before on the put. So as you can see, let's scroll left and see if there's any strong support there. Boom, bunch of support. Look at this, ton of support right there on that exact line that I have set. So now I'm interested in playing a call off the bounce of the 180 back up to the 15. So I see a lot of space to the upside from like 39.77-ish to 40.70-ish. So almost $1 move to the upside and a what? 50-cent move to the downside, maybe 80 to 20-ish, so 60% down move to the downside. So let me just see what a call would look like right now on this. I would say this is going to take like 3 days tops, so times that by 3. I would need like a 9-day out call. 8's close enough. It's probably 2 to 3 day move, so 8 would be plenty. $40 would be perfect. That's just out of the money. Actually, you know what? I could even do $39.50 and get an in the money call. So I could grab an in the money call. I might be able to get filled at a $39 call, to be honest, because, oh yeah, that's right. I forgot that I had more money because I won the last trade, so now I have 135, so I could get a $39 call, which is well in the money. And that's the spread on that's only 5 cents. I like that. Chance of being in the money on this contract, 75% almost. I like that. Theta's 0.02, super low theta, super low time decay. Especially for only 8 days on the contract. Delta's 0.7, so the delta's high, so the contract changes a lot as it goes in my favor, and it's almost a $77 move per dollar that the stock changes, so I like that. Implied volatility 19%, it's decent. Open interest 4,000 in the call, 7,000 in the put, so that's the only thing I don't like. 68 on the volume. So more people are definitely in the put than the call still, but I'm seeing a bounce back upwards. Let me just check for the heck of it the 15-day out, see if I could finesse a better contract here. If I got that, I could still do a $39 call. The spread's only 5 cents. And the chance of being in the money, 70%. Theta 0.01, so time decay is even lower. Delta 0.7. good delta there. Implied volatility 18%, 1,500 people in the call, 300 people in the put. So more people are feeling this to go back up within the next 15 days by far, 5 times the people than the put. I like that. Volume's 11, so that kind of sucks. But let me test this call. I'm liking this call. Options profit calculator, go to long call. Let me check this Verizon call again and see what we have here. Ticker symbol VZ, 39.83. What do we got for current price? 39.77, close enough. I'd be looking to get third call because that call looks a lot better to me. So it's third call. Let's check that. There you go. February 23rd, $39 call. Per option is what on the high end? High end, 118. All right, let me put in the price range. Price range would be 39.15 to 40.70. Calculate that. Okay, and then we'll say this is going to take about 3 days because that's the max I think this is going to happen. Today's the 8th, so I'm looking at the 11th. February 11th, if this goes up to 47, what am I going to be at? 65. And if February 11th, this goes down in 20, what am I going to be at? Let's see, the fourth number over, $49. So I'd be risking $49 to potentially make 65. So the risk to reward isn't that great, honestly. But let's say this happens in 2 days, because I think this move could happen in 2 days. So let's look at February 10th. If it happens in 2 days, 39.20 would be $47 loss. 40.70 would be 66. So 49 for 66. It's not a very good risk to reward ratio, honestly. That's the only problem with this trade. Only problem I see here is the risk to reward ratio is not great. Does look like a good potential trade though. Maybe if I crank the stop loss up a hair, let's say it's just below the 180, so 39.33, right? If I crank the stop loss up, say 39.35, and it takes 2 days, I'd be risking $38 to potentially make 66. Now that's more like it. That's at least 1 to 2 risk to reward ratio. So I like that. So if I was to tighten the stop loss to 39.35, might still have a trade here. Alright, so if I tighten the stop loss and put it just below the 180, as you can see here at 39.35. Matter of fact, I could tighten the stop loss even more because when I zoom in closer on it on the 4 hour, you can see that's not exactly below the 180. I would need it just below where it bounced last time. So let's say 39.40 would be the stop loss. Alright, 39.40. Because as you can see, when I zoom in on the 4 hour, I need it to be just below the 180 and just below this last run down so it doesn't fake me out. So 39.40. So if the stop loss is 39.40 and the take profit's 40.70, risk to reward ratio 39.40, 40.70. Calculate that. Alright, so if in 2 days, because I think this trade is going to take 2 days, so on the 10th, because today's the 8th, if on the 10th I'm at 40.70, I'd be at $66. If 39.40, $35. I'd be risking 35 to make 66. That's basically a 1 to 2. So that's not bad at all. So I like this trade with risking 39.40, which is just below where it bounced down last time, to potentially play it to 39.70, which is where the EMA 15 is and where there's some strong resistance. So I like this trade a lot. I think I'm going to put this one on. So let me look one more time at the daily. Looks like it's squeezing up. 4 hour looks like it's green candle pushing up. 1 hour looks like it's pushing up. So I like this for a bounce off the 180 back up. So I'm gonna play this for a bounce off the 180 back up. Ironically, the same company I just traded. We're gonna get a $39 call with 15 days on it. Let me look at the Greeks on that one more time. Percent being in the money. Percent chance of being in the money. 70% chance. Theta 0.01. Delta 0.7. Implied volatility 18, 1500 in the call, 300 in the put. Yeah, I'm gonna go with this. If I can get filled for 118, and we got something here, it's a trade worth putting on. Let's see, boom, filled. There we go. So the trade is filled, contract is filled, and I got the trade on. All right, so I'm currently down about 1%, about $1, but this trade has 15 days to work out. So ironically, the same ticker that I just played, but in reverse. Almost the exact same take profit and stop loss, but flipped. Risking 1 to 2 on this one, roughly. So it was support and then became resistance. So this line through these 3 wicks is something to keep an eye on too. But even still, there's a solid move to the upside, even if it only goes to there. So I'm gonna let this play out. I like this trade. Best case scenario, it bounces all the way back up to EMA 15 at 40.70. Worst case scenario, well, second worst case scenario, it only goes as high as 40.30. Still make profit. Worst case scenario, bounces down to 39.40. So it's looking good. I like this trade. I'm gonna let it pan out. Just let it do its thing. I'm gonna just let this trade play out. Let it do its thing, and I'll come back in when I sell. And we'll see what I got. All right, so now it's after hours. The market just closed, and look at this. It's already forming a nice green candle here on the 4-hour to the upside, looking like it's going to bounce right up to take profit 1 and potentially take profit 2, and I'm already up 4%, $5. Well, it's the next day, and Verizon is down and just hit the stop loss at 39.40. So I'm watching it close to see if it's going to bounce a little bit here. If not, I'm going to have to pull it for 30% loss, which isn't crazy for a swing trade, but man, the thing that sucks is SPY is actually up for the day. As you can see, SPY is green. QQQ is green. I'm like, dang, this sucks because the overall market's green. And look at Crocs. Crocs is up. So it seems like everything's green except for Verizon. Like, go figure, right? Like, come on, man. The market is overall up and green. But somehow Verizon is not. So yeah, it's looking like I misjudged this one. You know, I thought that it was going to be a nice little bounce off the 180, bounce right up, but it did have a bounce. Maybe I just missed it, you know, because if I would have got in right here at 39.30, there was a move to 39.90. So it's possible I just got in a little late and missed it. I don't like this candle either right here, how it freaking took a dive bomb after hours. It's some sketchy stuff there with the Verizon pricing. I don't like that, how Verizon does that. Takes these little aftermarket dips, these huge dips. But either way, I thought it was going to bounce off the 180 and go up pretty hard, and just looks like it didn't happen, man. So I might have to cut this for a 30% loss. I just wanted to eyeball it to make sure it's not going to turn around, not because I'm just hoping that it's going to turn around, but because the overall market's still green. As you can see, SPY and QQQ are green, so I was like, maybe there's a chance this thing will turn around, but it looks like it's just continuing to bomb. So I'm like, man, I'm gonna have to get out of this, which sucks, man. Mid price is 81, so I can see if I can get filled for 81. Watching the price in the middle of the screen, it's 39.35. Let's see if it can bounce back up off of 39.35. If it can't, and it's starting to, you know, stay below 39.35, then I'm just gonna try to get out at mid. Know what I mean? So now it's bouncing down even more. I better just get out of this thing. Let's change it to 79 and just get out at 79. So there, I'm out of that. 30% loss, 42 down, which sucks, man. That's pretty much worst case scenario because it erases my first gain, and takes me down to $95. So, you know, not ideal, obviously. So I'm gonna have to either add more money and then wait till it settles and start over, or just go from 95, you know, one or the other. But let me just peek back for a second and see what it's doing now that I got out, because this is usually the time when it turns around and goes back up. But either way, man, I'm not mad about it because I thought I saw something here. If you go back and look at the history, look at this thing, man. Perfect bounce off the 180, hang near perfect bounce off the 180 here, bounce off the 180, bounce off the 180. So many times this thing came down to the 180 and bounced back up. So I mean, it looked like a good trade, like it was going to hit the 180 and bounce back up. So it looked like it right about here when this is all you could see up to this point. it looked like it was gonna bounce back up and go up hard. So it looked like a good move. It just didn't pan out. It bounced off a little bit, went up, did this weird move, this stab all the way down, and then came back up a hair and went back down. So yeah, that sucks, man. That's not ideal. And the worst part about the whole thing is the market's green overall. SPY's green, QQQ's green, even Crocs is green. So like the majority of the market is green, and Verizon on its own just is in the red. I'm like, go figure, right? Ain't that some crap? That's how it goes sometimes. So it is what it is. Have to try again, start over. And after hours, Verizon does some weird stuff again and shoots all the way up to the moon randomly. Again. Such a weird stock, man. I don't know about swing trading this one. This one's a little strange. Price movement, price action here is strange.